Good morning, traders. It's Friday, August 4th. My name is Charles, and this is the Pirate Traders live stream. All right, let's dig in and see what's going on with the markets. Well, technically on the daily, we have a breakout of a balance area, which increases the odds the market will continue to go lower. We also have a trend on the daily, which is that we have been making lower highs and lower lows since the breakout. Both of those are indications that the market will continue lower, but we've essentially just been rotating, if you include the overnights, within this range here between like 45.45 and 45.15. So the market could be ready to get some balance. It could be ready to spend some time going sideways here before either turning around and heading higher or heading lower. And the thing that we're looking for is that right there. We just got it. So getting today's high above yesterday's high tells us that the market is now likely done with this excess to the downside. At least for the moment. It doesn't mean the market can't continue lower next week, but likely the highest probability at this point is either that we're going to go sideways inside this range today, basically just like we did in the overnight the last two nights, or that we will turn around and start heading back up to try to get back inside that previous balance area. So what we're watching for is where is the support and resistance? Who's winning? Is it the buyers? Is it the sellers? Is someone in control, or do we just get two-sided trade? So the first level that we're watching now that we've gotten above yesterday's high is yesterday's high, which is at 45.40. So we're asking, can the market find support there? If the market can hold yesterday's high as support, that tells us we have new buyers entering the market this morning. That would increase the odds that we're heading to the overnight high at 45.47, and we would look for buyers there. Can the market get up there? And once it does, do we get new buyers up there? New buyers above the overnight high would be bullish for continuation to the upside. Now, if we cannot hold yesterday's high and we pull back down into yesterday's range, or we look above that overnight high and fail, meaning we look above and we can't bring in new buyers and we come back in, either one of those will put us into a chop zone where the market will likely go sideways for the first few hours of the day, and we will need to wait for more information. But as of now, we have support. So this is bullish to test that overnight high, and we'll see if we can get new buyers up there. So remember, at this moment, the higher probability statistically would be that we just look above that overnight high and then come right back down and spend some time chopping sideways. So if they can bring in the new buyers, that is bullish as a when what should happens doesn't. So let's see if we get some business up here above 47. Okay, so there's the test. Now we're looking for new buyers. Can they hold this overnight high? Okay, so if the market can hold the ticks now, that is very bullish to see. We have held that overnight high, so if we bring in those buyers, they're going to take the market higher. Can they hold it? We have buyers. All right. I'm officially bullish as long as we remain above yesterday's high. We'll give it a little breathing room. We'll call it 45.40. As long as we can find support in here, we should be able to keep the market going. If the market pulls back down into yesterday's range, and in particular back through the opening price today, that will lead to more chop. It'll mean the market needs to go sideways for a bit. But the fact that we got above the overnight high and are now bringing in new buyers is a sign that we have momentum to the upside. So as long as we stay above 45.40, I will remain bullish, even if we pull back to test that halfback. Okay, so we've got resistance above around 45.51 and then again around 45.58. We would definitely look for the market to get slapped down at 45.58 because that was the base of single prints down, which just increases the odds that we will get sellers waiting there. But if they can bounce off of that, come back down, find support, and break back through it, things get even more bullish if we re-enter the previous balance area. So it seems like that's probably a little too much for today, but we'll have to wait and see what happens. The thing about the combination of short covering and FOMO buying is that it will shock you how far they can push it. And that's what we have here. We got 111 people hanging out, 28 likes. Smash that like button if you don't mind. A little thumbs up for the Pirates sure would be appreciated. Good morning to Nap, Ebb and Flow, Elsa, Travis, Deborah, Darth Liquidity, Philip, Tim G. Happy Friday! Somebody wants to get the weekend started. Mike, good to see you. PSC in the house. Holger, guten Morgen. JK. Jay, Frito, Esco, 200 dogs. That's too many dogs. Too many dogs. Miguel, Mr. Ree, Pavel, Sebastian, Gino, Scott S, and Scott H. All right, so we're getting that pullback, but this is not bearish, obviously, right? The fact that we already had those buyers means the bulls are in charge. So now we're just looking for support. We got some potential support around 44, around 42, and we want to stay above 40 to keep the momentum going. Yeah, let's pop over and take a look at the NQ. Okay, so exactly the same as the ES. Getting above yesterday's high is a sign the momentum down is over. So that increases the odds that we're either going sideways or higher today. But interestingly enough, they were able to poke back inside the balance area, right? This is the range that we were stuck in for the last few weeks. So the fact that they were able to get back inside there is a little bit bullish to see. But in the same regard, if they fail and start to pull lower, it would become bearish, right? In a when what should happens doesn't, if you get back into balance and then you get rejected out, it means you need to pull back further with price. So the bulls really need to hold the opening price, which it looks like they're testing right now, get back up in balance, and if they do, they are increasing the odds that they're heading up towards that opposite end. Just like here and here. Okay. So both markets bullish, and we just need to hold support. Can they hold it? We've seen this weird iceberg action before where they kind of just keep it pegged a few points above price. I would just completely ignore that. I describe it more like a glitch. River Rock, glitch in the Matrix. Yes, something just changed. Dude, classic. Travis says, if not already in a long, I'm guessing wait for a pullback at about half back at this point. If it goes without doing that, then so be it. It's completely up to you. You know, in my opinion, you guys saw when I said, oh, look, that's new buyers. So from that point on, I could get long anywhere because I'm just looking for a sign that there's new buyers, right? That's it. So I could get long anywhere. and it's a matter of measuring my risk. Now, if I'm looking for a place to put my stop, it would be below 45.40. So if I was going to go long at the overnight high, I would have to accept quite a bit of risk, in which case it would be better to wait for that pullback, which today we got right to half back, where I could have taken on less risk getting in there. But anywhere is fine. When you think the market's going higher, you just want to get long. Travis says, that's what I meant, but noted you'd have to size down. Exactly. So the question becomes, you're at that overnight high and you're thinking, I'm seeing buyers. Do I want to get in right now with more risk or potentially miss the trade because it might not come back down, right? It could have just kept going. And so that's just the debate that each trader has to do. Would I rather get in now where I'm guaranteed I'm in the trade, but it might pull back? Or do I wait for the pullback where I can get in at a better entry, but I might miss the trade? That's the art of trading. And this morning, they are not giving you much time to think about it. All right, so we're starting to push up into resistance. So now, once again, we need that support to hold to keep the momentum going. We're looking for support at the overnight high and once again at the halfback. Travis says, I waited for the pullback, which some days may not happen. I know. And it's frustrating when that happens, when you watch the trade go without you. The important thing is if you make the decision to wait for the pullback and you don't get it, that's fine. You just say to yourself, no worries. I'll wait for the next opportunity, and you don't try to chase price up. Got some serious tug of war happening here. Pew, pew, pew. Okay, so once again, coming back to test that halfback. Looking to stay above the overnight high. Or sorry, yesterday's high. Nope. All right, well, I am no longer bullish. That increases the odds we're going to get chopped. Why, you say? Why, Charles? Well, because the buyers just had their chance to take the market higher, and they couldn't do it. But the sellers are certainly not in control, right? So we probably just need to go sideways for a little bit. Grind around here to get back up there and give it another try. So as always, we now start watching the halfback. As we push into the halfback, does it become resistance? If so, we look to head back down and test support. If they push through, we look to head back up and then see if we can turn it into support. And we just let them keep playing tug of war as long as they have to play tug of war. And we keep watching that halfback every time for potential support or resistance. So now that we're below it, we're looking for resistance. Do we get it? If so, we assume we're coming back to test the support. Oh, look, 2 friggin' bracketing, whatever these are, icebergs. Okay, so halfback is holding as resistance. That increases the odds. We're coming back down to test the support. Chopping broccoli. Okay, that's twice now. We've passed back through the open. So that reduces the odds the market is going higher today. It's twice now the buyers have failed to hold above that opening price, further increasing the odds of sideways. Okay, first support does not hold, increasing the odds we need to test the next one around 32 instantly. All right, do the buyers step in here? Okay, so the ticks say we do have the buyers. So now we're seeing, do they get back to halfback? And what happens there? Resistance means we're coming back down again. Chop zone, gonna chop it up for a little bit. Okay, so now two signals at the same time that are a little bit bearish to see. Three signals, actually. One is the fact that the value is now up against the low of the day. So that generally means they need a little more excess to the downside. Doesn't have to, but it's just one thing to be aware of. Also, the ticks are no longer holding the zero line. We've begun to break below. So that's just a sign that there aren't buyers stepping in at support anymore. So it's a little bit bearish to see. And the fact that we pulled the point of control lower when we printed the B period, a little bit bearish to see. And the initial bounce to the downside. So none of this means, bearish, bearish, bearish. It's still just a chop zone. We're going to chop around. But it is just further increasing the odds. Today is going to be a sideways day. Oh, where will the support be to give us a bounce back up? Nope, liquidation. All right, no support there. So here's where it gets tricky, okay? What we're doing right now, these last few drops that we had, the drop from about here to here, and then the drop from here to here, these are liquidations. So these are the buyers who were FOMOing in this morning, getting squeezed. But as soon as they run out, the market will turn around and come right back up because liquidations actually strengthen the market. So you're thinking, I want to be bearish. I want to be short. Look at how quick it's falling. But just keep in mind, any one of these magical levels, we will run out of those sellers because they're just buyers that are getting squeezed. And then it will come right back up very, very quickly. So do not get bearish just because the price is going down. Understand the mechanism. Liquidation breaks actually strengthen a market because they squeeze out the weak hands and bring in the strong. More liquidation. So you're saying to yourself, Charles, I hear you, that we know that we're just squeezing the longs and that as soon as they run out, we're going to turn around and head back up and that we can't know exactly where or when that's going to happen. But what will get you bearish to think the market's going to keep going down? Well, I need to see multiple things. First off, I need to see a bounce. I need to see those, buyers that are getting liquidated get fully liquidated. I need to see the market come back up. I need to see resistance at the 0 line. We poked below it, but we haven't tested it again. And I need to see all of that before I'd be ready to go short. Now, 7.7 is saying the short was above. And that's a perfectly logical statement. You know what I mean? But that's just not how I trade. Because there was a very good chance, you know, like when we looked above that overnight high and failed, there was a very good chance we could have just gone boop and continued higher. So I can't go short without knowing the probability it'll work. Same reason I can't go short here. Same reason I can't go long. There's just no way to know the probability. So I have to wait for more information. Wait for confirmation. Then I can look for opportunities. Malang says 45.20 is the previous day's closing price. The overnight low is 45.14. So if we fail below 45.20, then probably the overnight low, but now it passes today's opening price, 45.39. Okay, so if we go below 45.20, you're asking, will we test the overnight low? No, there's no way to know right now. It's a chop zone. So all we know at this point is that we need more information. There's no, if it does this, it means that. We need a lot more information to know. Because they could literally, so this is the retracement of that liquidation. They could literally come right back and go all the way up right now, for all we know. They could come back and reject back down. They could come back and spend 2 hours going sideways. They could, you know, so there's no clear anything at this point. We just got to wait and see. To get bearish, you want to look for confirmation. So if the liquidation break doesn't retrace and we get new sellers, which would have been the ticks getting slapped down, that could have been new information. But right now, it's just saying very, very big chop zone. That's all it's saying. And that is not a zone to be looking for trades. It's a zone to be looking for more information. At least the way I do it. And then he says, and passing through the opening price would be bullish again? No. So same thing. Even getting back through the opening price wouldn't be bullish unless we saw other bullish indicators first, right? So if we pushed back up, passed through the halfback, went through the opening price, came back down, turned the halfback into support, and the ticks were holding, yeah, then the support at the halfback would be bullish, but not passing through the opening. That would just be more chop. Can anyone in the chat tell me why, I don't think it will, but if the resistance here held, why that would be bearish to see? What would be the reasons? Travis, you're close. Okay, so the reason it would be bearish, and again, I don't think it's going to hold. I think we're going to head back up to the halfback. But if this were to hold right now, it would be bearish for two reasons. And these are based on probabilities. First off, the liquidation break started up here. So if the liquidation break is just going to retrace and we go back to chop, we should be able to get back up to here, right? We also had a low volume node right here, which again just increases the probability that we will at least poke into it. So if, and it's happening right now, if we get new sellers down here without backfilling that single print and without fully retracing the liquidation, well, then that makes this a liquidation break with new money selling, which would be bearish to see. That's the cool thing about a liquidation. You don't know how far it's going to fall, but you know what it should do next. Whenever it turns around and starts heading back up, it should get back to where it started. And if it can't, that's the sign. They're going to keep it going lower. So now I'm looking to see, can this resistance hold? Can we get them ticks back below the zero? In which case I'd be bearish to head back down and test the lows. Seven says it increases the probabilities of one time framing for the C period. Yeah, it would. That would be new momentum down. Still too early, though. They don't have the ticks. Travis says, hypothetically, would you place your stop around 30 if you were going to short? No, that'd be way too tight. If I was going to short, it'd have to be above halfback, above 35. But again, I wouldn't short because there's no certainty yet. Price action is saying it wants to go lower, right? The price is holding the resistance, and we didn't backfill that single print. But the ticks are saying, no, we got buyers. Every time it pulls back, somebody buys. So that's not a reason to be a seller if somebody buys every time it pulls back. So it's just a chop zone. As infuriating as days like this are, where we have very large ranges, you know, you see the market move 5 points, 6 points, 7 points, and you're like, oh man, I got to be in a trade. I got to be in trade. This is just chop. No one's in charge yet. But we're starting to stack up pieces of information. We're starting to get an idea. And that's all we do when we're in a chop zone is we just start to build a narrative of what's happening. But we have to have good, reliable confirmation before we're certain enough to take a trade. At least the way I do it. But there's a very real chance that it could go right back up to halfback and then come back down. So if you were going to get short, you'd have to accept quite a bit of risk. Whereas, let's say the market sells off from here. Let's say the market pushes lower. Right? And then we break the B period low. And then the market comes back up to test resistance. Well, now you're one time framing lower. At that point, you will have to have the ticks for them to be able to do it. Now you can probably enter a short trade with much less risk, right? You won't have to accept that much risk to get in the short. You'll be able to get in, but you might just have to wait and be patient for that entry. Okay, so moment of truth. Can they backfill that low volume node? Or do the new sellers pile on once again? Okay, there's the backfill. And that's pretty much the retracement of liquidation. So remember what I said. Liquidation breaks actually strengthen a market. So now, as always in a chop zone, we're looking for resistance at the halfback. But I suspect we'll just pass right through and keep on chopping, baby. Because now we got to squeeze all those new sellers. This is what these emotional markets do. Everybody's desperate to get long, and then everyone's desperate to get short, and it just comes back and takes them out. Tim, I'm afraid Brady Bunch is a little bit too old for me. I don't know the song. Nor Q. Ooh. Man. Okay. So right now, highest probability is sideways for the day, but it could get very bearish. So remember, looking back into a balance area and failing is a sign you need a larger pullback with price, right? Essentially, they balanced, they broke out, this is the back test. That could lead to that bigger move lower. So right now it's a chop zone. Right now it's neutral. And we're waiting for more information, but that is bearish to see, as that may have been the back test of this node that they need to get back down to this one, you know? So I would describe the NQ as more bearish than the ES here. Oh, man. And you tested the overnight low. And values completely engulfing the previous day's value. Oh, man. I would not want to be a Q trader today. So, yeah, highest probability in my mind right now is sideways. But there is potential to get some new selling if they get back down below that overnight low. If they get back down below 15,400, that could bring in a bunch of new sellers. So right now, it looks like they're just going to go sideways. So pay attention to halfback for potential resistance, 15,490. And then the opening price, 15,512. If you get strong sellers at either of those levels, if you get really strong sellers that just completely smack the market down, so it comes back up and it's like, and it gets really smacked down, or that is probably going to be bearish for continuation lower. But if you can pass through those levels, no problem, then chop and rotation sideways, maybe all day long. All day long, all day, sideways, all day long. So as just viewed through the ES here. So once again, no reason to be bearish on the ES. That was nothing but a liquidation break. That liquidation break actually strengthens the market. So we know we don't have the buyers to go higher today. We tried and we failed. But now we don't need to go lower either because we brought in strong hands. So that increases the odds the ES is going to have a choppy sideways day. Maybe even stuck inside the initial balance all day on a Friday. Oh, no. No. Boring. Let's see what happens. Travis, in your eyes, the initial the ES is not tradable in the initial balance at this point. So any other day, I would say yes. I would say there's nothing to do here. But if we print the C period and we're still getting rotation, I might take some reversion to the mean trades. So I might look to sell the upper end of the range and try to grab trades back towards the middle, buy the lower end of the range and try to grab trades. But they wouldn't be rotational trades. Like I wouldn't stay all the way back to the POC. They'd be more like little scalps. And that's because of two things, right? The size of the range, just how big it is, and the fact that if we're just going to go sideways all day and we made this big of an initial balance, we may not break out till like the M period. You know what I mean? So if I'm really feeling, on this particular day, a desire to trade, I would just take more like scalp trades, sell resistance as soon as the market pushes lower, put my stop below, take profits very quickly. Don't fall in love with the trade. It would be a very unusual thing that I don't do often, but if that's what the market gives me, that's how I would trade it. But at the very least, at this point, I'm waiting for the C period. Jay says, no more TGIF, SFIF. So sorry, it's Friday. I know. I hate a Friday where we're stuck in the initial balance all day. It is the worst. Travis, no trade zone inside of value then? For now, yeah, for sure. For now. I will tell you, Travis, when I think it's tradable. I will say so. But for now, there's a 50% chance it goes up. There's a 50% chance it goes down. I cannot take a trade unless I have at least 60% certainty, right? So there's just nothing to do until I have more certainty. But I'm just saying my traditional rule of I never trade inside the initial balance. On a day like today, I would be willing to put that aside if we're going to spend the whole day stuck in the initial balance, which is what it looks like. And it's such a big range. So even if it was the same thing, but it was a tight range, let's say we didn't have this giant range. Let's say it was something more like, something more like this right here or this right here, then absolutely, I would just say, fuck it, no trades today. Right? But with this big of a range, I mean, you can jump in some trades and grab at least 4 or 5 points, which is worth the risk, in my opinion. But I will say so when I feel like I have some sort of understanding here. All right, so now we're asking ourselves, because we're stuck in the initial balance, which means we just don't know, no one's in charge yet, we're looking for new information. So where are the areas where we have run out of steam again and again? In here, and in here. So I'm assuming we're going to get smacked back down at one of these levels and head back down for the point of control. So if that doesn't happen, and we're able to push above the overnight high and bring in buyers, then that's new information that I can use. But for now, I assume we're going to get smacked down here. And keep on going sideways. Scott says NQ breaking over 500. Yeah, dude, NQ is just still chopping. So less bearish that you didn't get resistance at the halfback. The next level to watch is the opening price, 15,512. See, do you get smacked down there? Scott says, I bottom ticked the liquidation break, just taking one contract trades. I mean, if you bottom tick the liquidation trade, that's an amazing trade, but not easily repeatable. So celebrate this weekend, but don't try to do it next time. It's a brilliant trade now, though. The other Scott says, I 13 ticked the liquidation break, 0 contracts trades because I blew up. I assume you mean you got stopped out? Yeah, that's why it's not a good idea to catch the falling knife. You feel like an absolute genius when it works, but there's just no way to know when it's going to stop falling. So it's a gamble. That was 2022, Scott. Glad to hear it. It's very interesting to me that both markets bounced off the zero line on the breadth and the advancers versus decliners. Doesn't mean anything yet, but that's a little bit bullish to see. So as the futures were liquidating, they were buying the underlying shares. So I'm going to mark some levels for potential support here. I don't know that the market will hold them. I'm asking, can it? We got some resistance, but now can we hold yesterday's high? If not, we're pulling back down towards the halfback. Can we hold the halfback? If not, pulling back down towards the lows again. But in building a narrative, we did squeeze out the weak hand buyers, brought in stronger hand buyers, instantly retraced the liquidation, and now we're getting new buyers. So can they hold support? Who knows? But let's wait and see. If they do, it'll be bullish. If not, it'll be more chopping. 127 people hanging out, only 58 likes. Please smash that like button. I sure would absolutely love to cross that triple-digit threshold to get myself above 100 people being willing to push a thumbs up from me. It would just make me feel so good on the inside. Man, support right at yesterday's high. Interesting. Can they hold it? $777. I'm pressing like, but you have to do more public live streams. Come on, brother. $10 a month. That's less than one tick. One tick on the ES. I promise you, if you sign up, I'll say something within a month's period of time that will help you either gain a tick in a winning trade or prevent you from losing a tick in a losing trade. And it's paid for itself. Join the brigade. All the cool kids do. River Rock says, does the top of the blue box have any significance? It does. That's what we call the value area. So it's not like support or resistance, but it is kind of the best way I can think to describe it is it's like a signpost along the way. So say you're driving from LA to Vegas and you drive by a big billboard and it says, 100 miles to Vegas. And then you drive by another billboard and it says 50 miles to Vegas. It just kind of gives you an idea of what's happening with the market. That's the way we think about value. So the value area it represents roughly 70% of the day's trade. So price, as you all are witness to from this morning, can go anywhere and do anything. They can push it all the way up and then take it all the way down and then bring it right back up. Price doesn't matter. There's really not much, strength to the signals that come from price alone because it's an advertising mechanism. It goes up to convince people to go long, then it comes down to squeeze them out, then it goes down to get more people short, then it comes back up to squeeze them out, and it's just all over the place, right? But that value area, which makes up 70% of the day's trade, that is much harder to move and to adjust. So the signals that come from value are more reliable. So at this moment, what signals are they giving us? Well, first off, value is overlapping to higher from yesterday. So again, just tells us the market is not likely going lower today. that the higher probability is either sideways or higher. And the fact that it was all the way against the lows earlier on in the day, you'll remember I mentioned it's a little bit bearish to see that the value area is all the way against the lows. The fact that we were able to pull it back up here to the upper end of the range is a sign that we are spending more time and bringing in more value up here in the upper end, or more volume up here in the upper end of the range, which again is a little bit bullish to see. So it's just a slightly more reliable signal than price by itself, because price is just an advertising mechanism. You can't trust price alone. Seven said, I was in the brigade for 6 months, but then you decided to cut streaming all day. Listen, in the first hour, that's where the most important information is given. But if you were in and you felt like it wasn't worth the money, that's cool. But don't ask me to do it for free. If you're good at something, never do it for free. Christopher, I'm well. How are you? Cloud says, I'll pay for it if you'll stay the full session. I tell you what, if we can break the A period high, I will stay today as long as we keep trending. But I'm not going to sit in front of my computer all day if we're just going sideways inside the initial balance. So right now, they're setting up to try to break that high. They're holding that support. So there's a chance we could get some momentum here. But if it fails, pulls back down to the halfback, and then the halfback fails, I will be done and start my weekend early. But I'll give them a chance. Let's see if they can hold it. Thank you, Patrick. Appreciate you, brother. Christopher says, just had to ask. It's always what's the ES doing, not what Charles is doing. I know. All you guys want from me is market information. No, that's fine. I actually much prefer to talk about the market than myself. Design knob in the house. Pappy. Man, you guys are too nice. Thank you so much for all the kind words. Okay, so now we're back to watching those ticks. If the buyers were going to hold yesterday's high here at 45.40, they should also hold the zero line on those ticks. If the market starts to break through, we know the buyers are not in control. Can they hold it? Profitable Chad. Thank you, brother. Appreciate you. Design Knob says prayers for Pappy. Well, now, we're always so confused about exactly who Pappy is. If Pappy is just a general bearishness, absolutely. Prayers for Pappy. But if we're talking about Pappy as being Jerome Powell, he needs no prayers. He's killing it. The man literally created a soft landing. He did the undoable. And everyone was talking about how everything he was doing was wrong. And he just stuck to his guns, and look at us now. Pappy is not Jerome. Got it. Still not sure who Pappy is, but it's not Jerome. Man, you guys are just bathing me in compliments today. Thank you so much. Making me feel all warm and fuzzy on the inside. We're still 16 shorts like of 100, though. Just point that out. Design Up, you're not supposed to talk about that, okay? All right, those ticks held. That's a sign of new buyers trying to hold up the high from yesterday. A little bit bullish to see. Ooh, but it was a big spoof. Gotcha. Corbin just came back from 60 days in Japan. That must have been awesome. Corbin gained 5 pounds in 4 days. I am sushi and ramen out. But that's what vacations are for. Okay, we are starting to stack a lot of bullish signals up here. What is bullish? Well, first off, the selling was just a liquidation. That actually strengthens the market. Okay, so that drop brought in stronger hands. Since bringing in those stronger hands, we have not had any substantial selling, right? And now the more time we spend above yesterday's high, the more and more people we are convincing to go long. So it's not enough yet for me to take a long trade because we're still inside the initial balance, but I am starting to feel very bullish. So now what I'm paying attention to is, where do we run out of steam? The last few days and the last few nights up in this area here, right? You can just see we spend less and less time and bring in less and less volume the more we go up. So I'm looking to see, does that continue here in the C period? Do we barely poke up, spend no time, and pull back down again? Or do we poke up and spend some time and bring in some volume? That's new information. I'm very cautious, but I'm starting to get there. Thank you, WSS. Okay, seriously, stop it with the compliments, guys. Too much. Might be worth just taking a second here to zoom out a little bit and get some perspective of where we are. Bigger picture. By looking at the, let's look at the weekly. Yeah, so if we look at the weekly, yesterday, ironically, I was saying I really didn't think we would reverse and turn around, at yesterday's lows, because I thought the higher probability would be that we go back to backfill the gap we left behind on the daily. But now that I'm looking at the weekly, I'm thinking, we had support at that exact area before. In here, and then in here, and then there. So there is a chance, just a chance, if we can get above today's high, we may turn around and head right back up into the balance area. And then maybe this is just balance on the weekly. Balance, excess, balance, excess, balance with price. Not too early to say at this moment, but it certainly is potential. Okay, so I'm going to say something now that goes kind of against what I would normally say, which is I would normally say we're not trending as long as we're still inside the initial balance. As long as we're still in the range from the first hour of the day, it doesn't count as a trend. But just because of the size of the range and the liquidation break and the new buying up here, I would be willing to say that if the D period breaks the C period high, I could see that as a trend. Okay, but I wouldn't use the C period low as cessation. I would use the opening price. So I would say if they can get above the D period high, it would be a sign of momentum, and I'd be looking for opportunities to buy as close to the opening price as I can. And of course, I'd want to see the ticks holding that zero line before I'd make that purchase. But this does feel like they're trying to get back up to the high of the day. So let's see if they can hold it. Let's see if they can get that D period above that C period. Now, I would not get into a long trade here if they don't do that first. But if they do, I would consider it a trend. And again, the reason that it's different from any other day is the size of the range and the liquidation, and the fact that we've had no substantial selling since we retraced the liquidation. So we brought in strong hands, and they're not going anywhere. They're not taking profits yet, and so far, we're bringing in new buyers. So if those strong hand buyers from the lows aren't taking profits yet, they must be wanting to take them at a higher price. RK says, I got long at 24 with a stop at 18. Will sell if 52 fails. All right, let's do this. So you got long at 24. Yeah, bro. If you're long at 24, I would move your stop right now to below the opening price. Right? Like, just guarantee or lock in your profits right now. And then if they get above the A period high, use cessation from that point on. So use the D period low and then the E and see what you can squeeze out of it. But right now, it's, I mean, again, not confirmed yet, but it's in your favor. that they could break that high. Yeah, so 24 with 18 as a stop. Was that a good entry? Oh, yeah. Yeah, it was great. The liquidation was over. The momentum had shifted. And you used the low of the day. Yeah, that was a good trade. You're more ballsy than me that you were willing to get into it. All right. So as far as I'm concerned, I consider this a trend, meaning we are likely to continue to push to the upside as long as we can stay above the opening price. I do believe the bulls are taking control. Proceed with caution. I'll just call it bullish. Charles, why do you feel that way? Well, just because this is the area where we keep running out of steam and we are not running out, right? We're just bringing in more buyers and bringing in more buyers. The only reason to do that is because they want to take the price higher. Ricky, is the subscription only for the first hour? Correct, yeah. So I often stay for much longer, but I just only guarantee the first hour. Jonathan says the first hour is all you need to make money. Well, that depends what kind of trader you are. If you're a scalper, it is, but day traders generally need a little more time. But generally, I swear to you guys, the most valuable information I share is what I talk about in the first 5 minutes, when I basically explain what the market is set up for today. For example, we pushed above yesterday's high, so I said the highest probability was sideways or higher, and no longer lower because we'd made higher highs and higher lows. So that fact alone should have had you very cautious thinking about going short today, because we already knew right from the first minute of the day that the probability of going lower was the lowest likelihood. That's where I think the real value is. But I'll leave that to you guys to decide. We've got 91 likes and 133 people hanging out. Are there 9 of you that will push that thumbs up button for me? A little push, push. Push it real good. Bum, ba-dum. But push it real good. Gino says, any good lunch suggestions? I've recently become obsessed with the Highlight Club at Brooklyn Bagel. Turkey sandwich on an everything bagel. Beautiful. Ooh, Peter, I like where your mind is at. Everyone else hates you now. But I like it. We did it. Bow, 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 bow. Thank you guys so much. I really appreciate that. Got to remind the old YouTube algorithm that I'm still relevant, even though I hardly ever stream. So I remain bullish here. This is just a pullback, totally normal. But you know what I'm thinking now? All the people that are selling right here, you know, all the people that are going short right now, where are they putting their stops? Surely they're putting their stops somewhere. And wherever they're putting their stops, liquidity is beginning to build. And the market loves to go get liquidity. So in my mind, there's probably a bunch of stops right above the overnight high and right above yesterday's high. So as soon as the market finds support, we come back for it, take out those stops, head up for the next ones. So I am bullish. So if my prediction about these stops is correct, the book map will show us as the price gets above 47, you'll see a big green dot that looks like this. That's what we'll see because there's not a lot of liquidity waiting there. But all of a sudden, there'll be a bunch of buyers the second we get there. Those are shorts that are forced to cover. If we also get this red node right here of liquidity at 48, just a few ticks above it, if that disappears at the exact same moment that we see that green circle, that will tell us we're likely to keep going right up to the high. So that's what I'm watching for. Maybe I spoke a little too soon. Next trip. All right, so both the Q and the ES feel like they're trying to break their initial balance high. It is worth noting it will be a lot harder for the NQ. This massive node right here of volume from the cumulative, as well as the base of the single prints from 2 days ago, are going to act as resistance. So it is going to be a hard fought battle for the Q to break through. So we'll see if they can. But right now, it looks like they want to try. Scott says Amazon is killing it. Man, I saw a chart yesterday on Twitter that blew my fucking mind. It was comparing Apple's market cap to like other things. It's insane how big Apple is. Apple's now bigger than like the entire Russell 2000. That is mind-boggling. These mega caps, man, there's just no stopping them. Dude. Yeah, they should run out of steam here, though, around 145. But yeah, look at that, man. That is a big green candle right after some big old wicks. So that was buying for that next move to 45. Oh, I'm on the weekly. My bad. Oh, no, it's a massive gap up. Yeah, so I do think this thing is going to run out of steam soon. You got this previous balance area over here, right? And they're just creeping up towards the high of that balance area. So they're likely to run out of steam and come back down towards that balance area low, which is at about 40. But that gets them back in today's gap. So obviously we're talking about next week, but they could pull back on the Zon to try to fill that gap. But yeah, man. All right, moment of truth. Short covering, yay or nay? Looking for a big green dot and that liquidity above to disappear. They're trying to push it lower. See, this is bots, dude, playing games. So you can see here, they put this liquidity in to try to push the market lower, right? Now they're doing it again. They're trying to get it back down there so they can fill some more contracts. But the second that disappears, boop, off to the races. Scott says the gap was 7%, afternoon sell-off or Monday massacre. Yeah, I would say Monday is more likely. Generally, gaps that are that big don't fill the first day. Man, it's bots again. This is juicy. So they're trying to convince more people to short up here. Why? They want to get even more pressure when they break through to the upside. So they tried to use liquidity to scare the market away, but it came back. So they did it again, but it kept pushing in. So now they're using an iceberg to try to force the market to reverse right here, right where those stops are waiting. So they'll get a pullback, but man, when it comes back through. We can also now use the D period low as cessation of the trend. If they're going to keep the momentum going, they should stay above 42.50. Okay, so we're getting some of those big green dots. We're starting to squeeze some buyers, but they are still trying to hold it down. They're trying to absorb it. The iceberg is literally at price right now, 45, 47.50. You see it right here? So the big green dot, that's shorts that we're covering. They had their stops up there, right? So as those shorts were covering, normally short covering should make the market push higher. We should have gone boop, 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 boop. But instead, they're forcing it with icebergs to stay where it is because they want to get another pullback. And if they do, if they get another pullback, guess where all the stops are going to be? Here and here. Even more momentum when they come back through. It was all a game. Beautiful work by the robots today. But we just got more information, pulled that point of control even higher. We've spent so much time up here. We've turned this into a fair price to do business. No reason the market has to go down from here at all. Bullish to see. Oop, move down the iceberg. Not enough of a pullback. Uh, Tom says, do you use those spikes in price that trade lower to little volume in your analysis? 100%. So he's talking about the taper. If we look at the 30-minute profile, we can see every time it pushes down, there's less and less business, but they're stopping it like a brick at the highs. So yeah, that tells us they're just building momentum. They're just pulling that rubber band back tighter and tighter and tighter. And that the higher probability is that it's going to break to the upside. But they're just trying to get as many short-term traders to short right here as they can first. And they're still playing the game. So they force the market to get very slow, right? Oh my God, it was so exciting. It was down, it was up, it was down, and then all of a sudden just slows the fuck down. And then people get frustrated. I want it to go higher, I want it to go lower, and they start taking bets. And then out of nowhere, it just breaks. And it's like boop, 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 boop. And then everyone's like, oh no, fuck, I gotta chase. This is like computers at their absolute best right here. Using time and exact levels to trick shorter term market participants to getting short. All right, so moment of truth here. They should be able to hold this D period low at 43 if they're going to turn around and go break the high. So we are now in a place where you could get long with very little risk. Now, I'm not telling you how to trade, okay? I'm just telling you how to think about the market. What have we done today? We opened, we pushed up, we got a bunch of people long, we went down, we squeezed them out, then we came right back up, and now we're just spending all this time and bringing in all this volume up here. That tells us the market wants to go higher. So if we have a chance to get long where we don't have to take very much risk at all, that's potentially an asymmetric opportunity. Food for thought. So this is now literally the lowest risk place for them to hold the market and turn around and head back up. Can they hold it? That's the best entry they're going to get. If one did buy near that D period low, one could consider the idea of moving their stop just a tick above their entry, just as tight as possible above their entry. Give it as much breathing room as you can. But if they're going to take it up to the high of the day, they should do it right now and not come back through there. So you could take the risk off the table. Okay, now we should get that short covering. There's our first green dot. Tempo starts to pick up, more panic. Should get another green dot here in a second. There it is. Andrew says textbook. Andrew gets it. A half a point of risk for right now, 8 points of profit, but it'll be over 10 when we break the high. That is asymmetry. That is as low risk and opportunity as the market can possibly give you. And all it took was the patience to wait for 2 hours. The patience to be certain, to look for the lowest risk opportunity to enter, to not chase the FOMO in the morning. That's all it took, folks. Get the fuck after it. We got a poor high, increasing the odds we're going to pull back, find support, and then repair that poor high. Jonathan says, can you explain the asymmetry? Yeah, so the asymmetry is the amount of risk you have to take for the potential reward that you could make. So today, the market gave us a chance. You could have got long anywhere in here with your stop, a half a point below that D period low. So let's say you got in at right here. Well, then you were risking 2 points, right? Or you were risking 1 point, or you were risking half a point. So that's all you have to risk, right? But your potential reward was like 10 points if we repair this poor high. So what that presents you with is an opportunity to take very little risk with very large reward. Now, if you, for example, use your position size where you say to yourself, okay, I'm going to risk 2%. So a half a point represents 2% of your account size. Well, then making 10 points means you just increased your account size by like 5% in a trade. One setup. Now, you had to sit here for 2 hours waiting for it, but just like that, boom. That's the beauty of asymmetry, is that you can take such a little amount of risk for such a large potential reward. I have found, in my own personal experience, that if I just try to take every time the market gives me an asymmetric opportunity, it doesn't really matter how many of them work or don't. I end up making way more money. Because I might lose 2%, I might lose 2%, I might lose 2%, and then in one trade, I might make 10%. And I make back all my losses. And the coolest part about this one was you can move your stop above your entry and have no risk at all and see how far they can push it. So the bots are playing the exact same game that they just played with the D period high. Remember what they did? Let the stops build and build and build so that when we came back for it, we could just go boop, 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 boop. Now they're doing it again at the poor high. Same game, round 2. They're shutting it down exactly there so that people are seeing a double top and shorting, putting their stops up there. But the fact that it's a poor high and the value area is up against the high of the day increases the odds. We will find support and come back and repair it. And when we do, we can expect to see the exact same thing again. Boop, 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 boop. That's why they create that poor high. Falcon One says, how do you know they are holding the market down? Because of the icebergs. So what you always want to look for is confluence, right? If the market is doing something at a very exact place, like the market running out of steam to the upside and then turning around and heading lower, that's no big deal. It happens all the time. But when it does it exactly at a level and again and again and again, and then you look and you see that there's icebergs holding it down at that level, it's just a game. Well, guess what we just got? We came right up to the A period high and we got iceberg smacking the market down. So we just know it's all a game. Trying to get those scalpers to go short. Courtman, did you make any updates to the training videos after the last couple months? Do you mean the e-course? No, I have not. I do plan to in the future, though. I've just been focused on the workshop. Falcon 1, do you need Bookmap to see that? Yes, you do. To see the icebergs, you absolutely do. Scott, thank you, brother. We'll see you next time. Oh, man. Both markets at the exact same time. made a poor high. That is so funny. WSS says level 2 DOM, such as Jigsaw, will also show the icebergs. Well, there you go. Speaking of which, it looks like it's the battle of the icebergs right now. Bot shenanigans zone. Frito says, if you're still long, they just got to get some range extensions here. If what you mean is that they're going to run out of steam above the high, that is certainly possible. They may just poke up there and then come back down. But alternatively, the NQ will be back in the balance area, turning the last 2 days into a look below and fail and trending higher. And that is extremely bullish to bring in more buyers and more buyers and more buyers. As crazy as it feels, that massive liquidation break this morning may have been the stronger hands positioning themselves for the market to move higher today. But we'll have to take it one tick at a time. Got an even poorer high. See the exactness of this? The way they're just absolutely trying to stop it to a tick at the high. Only one reason to do that, to put liquidity above. So they can get their boop, 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 boop. Deborah says, does it look like it's running out of steam? No, exactly the opposite. It looks like they are winding it up, winding it like a jack in the box. They're just making it tighter and tighter and tighter and tighter so that it can friggin' explode. Oops. Where's this danced? What's it called? A trend. Okay, so exact same play as before, round two. They did it to us in the E period. They're going to do it again. They're going to pull it back as low as they can. Get as many people short as they can, and then out of nowhere, right back up. So we are looking for support. Christopher says, can you explain cessation of the trend? Yeah, so the cessation of the trend is basically just a market generated signal that tells us the highest probability is that momentum is over, right? So if the market is trending higher, if each TPO is higher than the last, the market keeps moving up, as long as it stays above the low of the previous TPO, it is likely to keep going. That's just what momentum is, right? It's a sign that you're getting more people long and more people long. So what we do is we look for two letters below the previous TPO to be the sign that that momentum is over. So for example, I don't think it's going to happen, but for example, if the F period were to come down now and get 2 ticks below the E period low, we would know the trend is probably over. That's it. That's all they could get for it. Now, again, I don't think that's going to happen because the poor high is so poor. But if it were to happen, that would be the signal. Now, it's important to understand it's not like the market. It's not like the market always stops trending right there. Sometimes it does poke below and then turn around and start heading right back up again. But it is just the highest probability that if it dips below there, that means the momentum is over. Technically speaking, this isn't officially a trend because we have to break out of the initial balance. But as we went over this morning, because it's such a large initial balance, because of the liquidation break, we can call it a trend early. If all of this seems confusing, don't worry. Keep watching. It'll make sense. These things happen again and again and again every day, over and over. And once you've seen it enough times, you know what you're seeing. Okay, so as we were pulling back, I wanted to look at the ticks to see if we still had buyers stepping in. We, of course, did. We saw the ticks bounce again at the 0 line. So now I'm going to switch over to the Bookmap to see if we get the same thing as before. Do we get another iceberg trying to smack us down exactly at 51 again? Or do we pop through, get those green dots, and get our boop, 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 get our short covering? Let's find out. Another one. The high remains poor. Deborah says, I'm going to scream. Don't scream. Who cares? It's every time they do this, they're making it even higher probability that it's going to break and that it's going to break even bigger. So let them play their game. Let them play it as long as they want to play it. Let them get another pullback and create another poor high and get another pullback and create no reason to be upset because you know the odds are more and more and more in your favor each time. And by the way, we have now broken the initial balance, so this is officially a trend by textbook definition. And so you guys are thinking, Charles, I don't really understand why they do this. Why do they create these weak and poor references in order to build up stops to get liquidity to go take out that liquidity? Why on earth do they have to do that? Think about it like this. How many people in the room right now want to wait for the market to push up here and then go long up here? How many people are waiting for that? Probably very, very few. Probably if you're wanting to go long today, you are either already in it, or once it gets up there, you're going to be like, well, it's too far. I missed it. So if the overall market participants want the market to keep going, they've got to find a way to force people to get long up here, right? Where you don't even have a choice. Well, how do they do that? Well, they get shorts to cover. So by stopping it again at the exact same spot, more people go short. They stop it again right now at this moment. More people are going short, right? And they're putting their stops up there. And that's what the market has to do so that when it finally gets up there, they can force a bunch of people to become buyers up here. And that's what keeps the momentum going. So it's just a mechanism of the market. It's not some evil man in a, boardroom somewhere being cruel. It's just this is what the market has to do today to get the liquidity to make the move it's going to make. And so we don't have a choice. We can't control when it's going to break. We can't control how many times it's going to pull back. We can't control how far it'll break once it does. But we can use the fact that we understand the mechanism to give us an edge, to look for opportunities to take trades. So there you go. There's the repair. First little green dot, took out those. Boop. So now let's see if we can get some more. Boop. And some more. Boop. There's another set. Boop. Right? And this is just what it does. It's just how it works. And sometimes they make it easy. Sometimes they make it hard. Today they made it very, very easy to read what was happening, but very, very hard to stay disciplined because they just kept it coming down and kept it coming down. and just kept everyone freaking out. But now look at that. Now they can make 4 points in less than 10 seconds. Why is that possible? Because they put in all that energy. Look, another 300 stops. It just keeps going. So that's what they're doing. They're building that tension. They're winding up that jack in the box, winding and winding and winding and winding until they can finally break. But here's where it gets really interesting. Now, guess what can happen? Now there can be a bunch of traders who weren't long or short, who were waiting for more information, that are like, oh, fuck, I'm missing it. Look at how far the market's going without me. And so now they have to start to chase. So now we start to get FOMO buyers, right? And that momentum just keeps going and going and going. And so all of a sudden, at the end of the day, you find yourself like all the way up here, and you're thinking, how is it that they had such a hard time getting past this one exact level if the market was heading all the way up here? Well, the reason is because that's the mechanism of the market. That is how the auction process works. So all you need to do as a trader is learn to recognize what's happening and then manage your emotions while it's happening. And just remind yourself, look, I know what game they're playing. I know what's happening here. No reason to get upset that they're doing it very slowly. No reason to get upset at how many times they grind. I recognize what's going on, and I'll just be patient and wait. That's where those opportunities come. So now your half a point of risk that you got in at the E period low has given you 13 points of profit. You risk 2% of your portfolio and you're up 20% right now. And you're chilling like Dylan at this very moment. Why? Because you didn't get impatient earlier on in the day. So you didn't take on any losses. You waited for a good entry. And then you didn't get squeezed on the poor highs because you knew you were setting up for that next move. This is the two-way auction process. This is what I talk about all day, every day. If you're new here, I encourage you to join the brigade. You can hear me mention these things every morning. But with that, I think I'm probably done here for the day. Time to go get some celebratory lunch. As far as what comes next, we got to just monitor for continuation higher. So we're getting ready to print the G period here in about 2 minutes. At that point, as long as the market can stay above the F period low, they can keep it going higher. Okay, so you just look for resistance, look for a pullback, look for support. Can they hold it? If they can keep going higher. They can do this all day long if they want to. Now, I don't think they will on the ES. I do suspect that about 45.58, we're going to run out of steam and we'll probably get cessation after that. But on the NQ, they could go all day long because we have now just re-entered the previous balance area and grind through this large node of resistance. So they've got to look below and fail, which increases the odds they're heading to the opposite end. Okay? And they've got a trend, and they just broke through very strong resistance. So the NQ could just keep going all day long. The two-way auction process, my friends, it is a freaking beautiful thing. B-E-A-beautiful. Thank you very much. And I hope to see you all on Monday morning on the Bookmap stream. Thank you to all the new subscribers. Welcome. Remember, for just $10 a month, you can hear me talk about these things every morning and set you up for the day. Join the brigade. Link in the description. Okay. Bye.